An investment in knowledge pays the best interest. Ben Franklin. Your investment in knowledge is 10 to 15 minutes a day learning how the markets work. Practice trading, doing all that you can to garner charting knowledge and skills. And we teach all of that here every single day. It is for free. So join us. Go to chartingwealth.com, sign up for our daily email where we send out at the end of every trading day our daily market review 4 days a week, our weekly review and forecast on Fridays after the market closes. You will see every day all sorts of great stuff in there. There are links to our daily market worksheet, trade worksheet, weekly market worksheet. You can also learn how to use those. We have trainings on that. We have trainings we send out every single day for you to take for a few minutes to learn. Today's training is fractional shares, the next step after paper trading. Very important. Let's jump into these charts. We see stocks and bonds up for the day. Gold is down. Bitcoin is up. Let's jump first into the S&P 500. We always start there. Well, almost always. Sometimes we'll start with Bitcoin. And we always start on the weekly chart. You start with your largest time frame and you work your way back. What do we see happening? Up for the day, 0.40%. Price percent oscillator getting closer and closer to crossing over, going up. Derivative oscillator losing downward momentum, still just a little bit negative, going into what appears to be the fourth week of up movement. We'll see if that happens. We look at the 2-day. It crossed over, going up back on the 19th. And again, this latest 2-day candle that finished drawing on Tuesday is a nice big green up candle moving up. Price percent oscillator, derivative oscillator heading up. We look at that half-day chart and it is getting closer and closer to crossing over, going up, but just still not quite doing it. So we won't change our line yet until we have that crossover. It just tells us where we can glance quickly and see that our trend line on the half day has not reverted up. We always redraw that trend line when we have a crossover. And again, these trend lines, like everything else, gives us a quick visual cue as to what's going on. Weekly still in a confirmed down move, as is the half day. 2-day is heading up. So we'll continue to watch and see how things shape up. We might have a weekly vertical crossover at the end of the week on the S&P. Remember, you don't have a crossover until it occurs. And then the time period we look to jump in is right at the close of the market on Friday. If that does occur on a practice trade, we'll wait and see. Let's move on to the NASDAQ 100 as represented by QQQ. What do we see there? Again, it's getting closer, hasn't crossed over yet. We see that the derivative oscillator is still negative, losing downward momentum. Nice green up candle, third week running. And things trying to move up. Now we're just 2 days into a 5-day candle. We look at the 2-day. It crossed over, going up, back on the 2-day candle ending Thursday, the 21st. So that represents Wednesday the 20th, Thursday the 21st. And again, we see things moving right up a very beautiful, strong trend line. Price percent oscillator heading up, derivative oscillator heading up, 2-day chart. We move now from that to the half day. We see that the price percent oscillator is positive, unlike the S&P, and derivative oscillator heading up. Things moving right up a beautiful long trend line. So again, we'll wait, watch, and see as this week develops. Like the S&P, will the NASDAQ 100 crossover going up by the end of the week? It may very well do that. It may not. We'll wait and watch and see. What about 20-year bonds? They're still negative. They're not as close as the NASDAQ 100 or the S&P 500. Now, those of you who remember the past before COVID, typically, well, before we saw such an inflation in the marketplace with all the money printing, or as I like to say, simply changing the decimal points on the Fed's money sheet. What we see happening is, what we used to see was the S&P would go one direction, stocks would go one direction, bonds would go the other. Why? Because Bonds would be a safe haven if stocks were doing bad. If the stock market's going up, bonds wouldn't necessarily be moving up because money would be shifting from them into the stock market to make better gains. You saw Treasury bills as sort of a safe haven. Well, now we see the more of a disconnect, I guess, than we've seen in the past. We see up for the day 20-year bonds, price percent oscillator still negative but heading up, derivative oscillator negative but heading up. Going into the second week of up movement, we still haven't reached the high of the prior week. We look at the 2-day, and of course it crossed over back on the 27th of October. Then 2 days of more strong up movement, and then these last 2 days losing a fair bit of that. Price percent oscillator still heading up, though decently. Derivative oscillator gaining upward momentum. Half-day chart, you can see where things peaked there on Wednesday and Thursday of last week, the 27th and the 28th, in the afternoon on Thursday, morning on Wednesday. Morning on Wednesday. Afternoon on Wednesday, morning on Thursday. Thank you. And then, of course, we saw things slide sideways, drop strongly on Monday morning, and then try to start moving up Monday afternoon and Tuesday. See things moving up on this half-day chart, moving up on that 2-day trend line, not penetrating it. Price percent oscillator is about flat. Derivative oscillator has gone negative. So where are we on bonds? A little bit schizophrenic. 2 days up, weekly is still down. We'll just wait for bonds to sort themselves out. When we have that going on, we don't have a trade till it resolves itself, either with a weekly vertical crossover up or a 2-day recross going in the same direction as the weekly. So that would be the 2-day dying, rotating over, going down. One of those two things will happen. We'll wait and see. Now, back to the weekly. On to gold. Gold down for the day, 0.21%. Now, we had that weekly vertical crossover this last Friday. Didn't feel real strongly about it. We talked about that going into it. How's this week shaping up? Well, we saw what happened on the last weekly vertical crossover on gold, trying to take off and then died. We see things slowing down in gold. We have a red open box candle with a little wick on top. It is pushing just right there at the weekly trend line. Price percent oscillator still going up. Derivative oscillator going up. Take a look at the 2-day. Again, you can see where things popped up on Monday morning and then slowly dying as we move on. And again, not looking so sharp for us. So, I mean, we can continue to watch. We saw where things had popped up last Monday, and then as we started into this week, things just rolling over and slowly disintegrating. Derivative oscillator is still trying to head up. Price percent oscillator losing momentum. Red spinning top right there on the 2-day trend line. We look at the half day. What do we see? Well, we can see where we had things after Friday going after Thursday, going into Friday, pumping down and then recovering a little bit on Friday afternoon, and then Monday, like we said, trying to bump up and then rolling over. So we will just continue to watch and see how things develop. We do see prices still above that weekly trend line, but pushed through the 2-day as we saw things start out on Tuesday morning. So we'll, and then down a little more in the afternoon. So we'll just continue to see how this developed. As I told you, I wasn't super positive on this weekly vertical crossover, seeing what happened to the last one. So again, not shaping up quite well. And we were forewarned and forearmed. Now, let's move on to what's up with Bitcoin, up 3.47%. We see, again, a week starting off with a smaller candle than the week before. Last week's candle was smaller than the big week that we saw. The latest big real pop-up was the week ending Friday the 22nd of October. Price percent oscillator nonetheless is still trying to move up some. Derivative oscillator moving up, but again, smaller candle forming. Not touched that high that we saw back on the week ending the 22nd of October. Prices above that weekly trend line, but weakening. We look at the 2-day, and of course we can see where things bumped up on that Wednesday, Thursday candle, the 20th and 21st, and then things sort of devolve from there. This latest candle is a green up candle, maybe trying to recover some of that. Price percent oscillator is a little more than flat. Derivative oscillator positive, but still losing momentum. We look at the half day, and again, we can see where things topped there on Wednesday, and then sort of devolving, sliding down, sideways, and then trying to build back up. Not yet crossing over, going up on that half day, but maybe that is recovering. Price is still above on this half day chart, still above the weekly, but below the 2-day. So we're hoping Bitcoin is going to continue to just gain a little bit of that momentum, keep moving up. If you want to learn how to trade Bitcoin, then you need to practice trade with us. These charts are quite valuable. Those of you who've been tracking Bitcoin with us since we started doing it at your request have, of course, seen these charts give you a good feel for how the New York Stock Exchange Bitcoin Index is moving. That's where we are, folks, as we end the day on Tuesday, go into Wednesday, hump day. Patreon members, do not forget that tomorrow, 12:30 Eastern Daylight Time, we will have our live question and answer call-in session. If you haven't sent your questions in, go ahead and do so. Also, send us the stocks and ETFs you'd like us to help you backtrack for practice trading. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.